Hey, what's happening? What's going on, everybody? My name is Matt, in case you don't know who I am. Welcome to this YouTube channel where we talk about day trading futures. In today's video, we're going to be talking about some potential entry points using the OGC no diddle chart, right? Using the 22 range. If you watched the stream today, you'll know that we ended today with $1,100 of profit. If you didn't watch the stream, go back to the channel, click on the most recent live stream before this video, and you'll see the entries. It's 4:30 Central here, so all of my exits already got taken off for the day. I was a little slow on the delivery here, but I just want to use this time to talk through a couple of the trades that I did do, why I took them, and how you can replicate these in the future, right? So let's go ahead and dive into it. First things first, make sure you press the thumbs up button down below and subscribe to show some support for the stream. So this red, yellow, and blue line is part of an indicator series called the OGC Don't Diddle. In order to find it, you go to Indicators, Explore Community Indicators, all while on Tradeify, and type in OGC, and it's the OGC Don't Diddle. Basically, what it is a whole moving average with a 4x ATR, so average true range, 4 times standard deviation, off of it. What this allows us to see is kind of a mean price, so where the price is going to naturally fall, as well as where it overextends. Now, paired up with our volume histogram over here on the right side, as well as our volume weighted average price, which is this light blue line, it is a deadly pair. You'll see me trading it a lot on stream. And there's a lot of different things to it. But at the end of the day, it's very simple to use, right? So the idea is, as we approach the red side, odds are we will pull back to the middle line. As we approach the blue line, odds are we will pull back to the middle line as well. We use our VWAP as well as the histogram for confirmations, and that's it, right? So here you can see we had a nice little plummet. We bounced off the blue line back up to the middle line. So quick mean reversion play if you took that, right? But the one I'm going to talk about here actually occurred at 800. So we quickly moved up, we touched the red line, which means odds are we'll probably pull back. We actually consolidated with decent buyers coming through. So I actually got long off the whole moving average. Typically the orange line means don't trade it, right? Because it could go either way. But when you see a move like this, and I want to call this out specifically because you'll see me take it a lot. When you see a move that pushes up and then consolidates and then bounces off of the middle line, odds are the trend is going to continue up, right? So we actually bought this as well as with some volume at 800 off our histogram. We took one contract off at 5 points profit and let another contract ride up to volume here at 29. You can see the volume right there. It was today's point of control for a long time. And so we just targeted volume. A lot of times I'm using the OGC Don't Diddle for mean reversion style plays, right? So if it's bouncing off the blue, I'll trade it up 5 points or to the orange. If it's going up to the red, I'll play it back down to the orange line or for 5 points, whichever comes first. As we scroll through, you can see again how it reacts. Bounces off blue, goes up to the orange, right? Goes up to the red, bounces off the orange, blue, bounces off the orange, etc. Sometimes the moves aren't that dramatic and it's just this long, slow grind, and that's when we're just not trading the orange line. You know, it's that simple. Go up to the red, bounce off the orange. Go to the blue, bounce up to the orange. Does that make sense? So you're basically seeing how these bands are basically showing potential areas of price retracement. In theory, you're not going to take that many trades off of the orange line. You should be taking more trades around the red or the blue or the red, and not that many off the orange, unless you see what we saw earlier, which is a lot of buying coming through, a rejection off the red with no real move to the downside. They're holding this level, right? And so it's going to be a next move up, and that's a potential long. It's lower probability than taking something like this. It's a lower probability trade, but it's just as viable. Again, you'll want to match it up with your volume histogram over here using support and resistance lines with your histogram. What that means is if I see a large volume sticking out like this, if price was to come up to here, we would definitely stall out at 10,740, you know, where that volume is, and potentially rotate back down. So What I play with these is called volume voids, meaning if we get this level, we'll quickly move up, or if we fall into this level, we'll quickly move down. Basically just filling the void, right? And it'll quickly do that. So it's a very simple scalping strategy using the OGC don't diddle bands with a 22 range chart. As always with trading, you need to accommodate this to make it your own. You'll have to backtest to figure out how you like it, how it works for you. I've found a lot of success trading this, and if you watch the streams, you know I like it a lot. But this video is basically just to give you some ideas of potential entry points on your trades as well as take profit points. If you're trying to scalp, again, get long on the blue, exit at the orange, or get short at the red, exit at the orange, right? Pretty straightforward. So I hope this video was helpful for you. If it was, make sure you subscribe down below. Smash the like button as well. We also have a free trading chat, which is linked down below. It's just an area for traders to come together. There's 2,200 people in there right now. Traders to come together, talk trading, have someone to discuss strategies with, etc. And as always, we are trading Top Step through the funded account. If you are interested in getting someone else's money to trade with, all you have to do is pass a 2-step process to prove that you're a decent trader, and they will give you money to trade with as well as take on the risk. So if that's something that interests you, you can click that link down below that says Become a Funded Trader to find out more information as well as get 20% off any of those combines. So I hope you have a great rest of the day. I will see you in the next video, and peace.